Hi, this is Joe Serta, President of NAIFA-Indiana, welcoming you to the March edition of NAIFA-Indiana This Month, your video newsletter. February was a short but busy month for NAIFA-Indiana. We had our 4-hour combined live and virtual CE Day, February 18th, and the Government Relations Committee has been hard at work making NAIFA-Indiana's opinion known during the long session of the General Assembly, including some very exciting reforms to Indiana's long-term care insurance laws. The pandemic has forced us all to modify how we do business, and the Government Relations Committee has shown particular resourcefulness by pivoting Al Sear Day on the Hill from a live event to several monthly virtual meetings. In January, we had a very informative session with the Indiana Insurance Commissioner, and in February, we had a great discussion with Senator Andy Zay, Chair of the Senate Insurance and Financial Institutions Committee. For those of you who missed it, here are some of the highlights.
Well, thanks so much for joining us today. I wanted to take a moment. We've got some NAIFA members on the line. I think you probably know a little bit about NAIFA, but I think similar to you, a lot of our members are business owners, and so they're practical, and hopefully when we work with you, they realize that the real world and what it means to run a business. And so we look forward to working with you, knowing that that's your background and your experience as well. We've really appreciated working with you this year and your leadership on the committee. 261 has been a bill that we've really said we want to work with Senator Walker and Senator Grooms and you and be supportive of what you're doing. So we appreciate your leadership and having dialogue on that and moving that discussion forward to hopefully get a great solution for the folks of Indiana. And I understand you've also been maybe looking at the 30-day language for medical records, which for us is a big deal because as we try to close these policies, life insurance and disability, if we don't get those in time, oftentimes we have to start that process over. We had one question I sent beforehand, which to me seemed complex. I had to read it 3 or 4 times, but we really want to hear from you and kind of your vision for the committee and just really what you want to do this session and moving forward and how you see that working out for you and your vision for that.
Well, thank you very much, John. And I appreciate you reaching out today and a great opportunity to get together. And, my vision isn't that bold and that brash right now. It's a matter of just really getting into the seat and having served on the committee, I'm familiar with some of the issues and attended some NCOIL events. And I think you and I have connected a few of those over the years. It's getting up to speed. And I think Indiana is a pretty good place for many lines of insurance. And we just want to make sure as a state that our policies and our commissioner and the agency that oversees it is doing the right things, doing the right job, making it a good place and a good home for the businesses to operate and do business, and ideally domicile in Indiana. And of course, then also making sure we're being true to our consumers and those that are purchasing these products. So, very excited to continue that moving forward. Did have a meeting with the commissioner this week and get his thoughts. It's kind of the press up of where the long-term care bill, has come out. And I think it was, as it was explained to me, it was a big deal when it first came out, and Indiana kind of led the way in that, and time has passed it by. I don't know if this legislation is going to accomplish all that we hope it will in long-term care. But that's also just a difficult market because of the expensive nature of it and, protecting the assets and, kind of some of that up against the investment world and really securing our own long-term care in a different way. But, I think that's, one issue I want to continue to learn more about. And, Senator Walker and Senator Grooms kind of taking the lead on that, hoping we can get that 30-day language amended in there. And I asked those two to work together to have one long-term care bill. I think that's, insurance-wise, it's just kind of that and relying on you and some of the industry specialists to see what needs to be done and in many cases what doesn't need to be done and how and where we can appropriately place our state in the future. I appreciate you and many of your colleagues' expertise, and I'm going to be drawing on you as we move forward.
So being in the position you're at and kind of your personal experience running a business, having employees, seeing the healthcare cost, and now being on the insurance committee, now chairing the insurance committee, what are some of your thoughts on addressing some of the high cost of care issues? Because I know you've been involved just watching that committee and kind of tackling these issues. Where do you think Indiana goes to try to address some of that?
It's a tough question, but it's a very real question. I will tell you personally, that is a constant theme around my district is the cost of healthcare, whether it's hospitalization, whether it's doctors, whether it's drugs. And those issues are constantly in our face. We have a federal government that's dabbled in it, and depending on who you speak to, in some perspectives has made it worse. Has limited some competition, has incentivized, just by nature of all the regulation involved, has incentivized consolidation where it actually is taken some of the competitiveness out of the marketplace. And the second point I would say is some of the consumption models have changed over time as well. Specifically, we're dealing a lot with PBMs and the cost of drugs. I think the role they played as a wholesaler 20 years ago is a lot different than the role they need to play in 2021. And I think there is a lot within that. There's a lot to unpack, whether it's transparency, whether it's cost affordability. But my concern is, how are we driving that down to Main Street? How are we driving that down to the consumer? We've seen some of those same challenges in some of the health systems where we've had the RAND report out the last few years, and the cost of the services that are being provided in our hospitals and in our healthcare systems. And those are things we've started on the last few years at the state level with price transparency and having a good faith estimate, and really trying to open up some of these things. There was a site of service legislation that got pretty dicey last year in insurance. I don't know if Senator Charbonneau is looking at that in the Health Committee this year. I don't have the answers. I have a few pressure points where I feel there are some challenges and maybe some opportunities to make a difference. We simply have got to find a way, because I will tell you from the street level, from the district level, from the individual level, it's a constant theme. What was being consumed in those arenas in the past is where businesses or even unions and other organizations were providing this health insurance for free. They're not anymore. And so it really becomes a cost of living thing where we're being asked to pay more and more for really less and less kind of coverage, at least where the first dollar is falling on the consumer. So that's dramatically affecting cost of living in our country, honestly, but certainly in our state and within so many of the communities that we live. When you have family deductibles in the $7,000, $8,000, $9,000, $10,000 range before the high deductible plans, I guess what I'm referring to, before the coverage kind of kicks in, it's a tremendous challenge, it's tremendous hardship on the middle class and families. And we need to find a sweet spot. We need to find a way to all work together to try and find the best ways. My vision is a little bit that we need to have the consumer more engaged in the first dollar. And they need to be making those consumer decisions where it's transactional, where they're looking at options of getting the best price for their drugs, the best price for their care. And, that creates a lot of discomfort. We've lulled ourselves into a bit of a comfort level in how the systems work. And certainly the industry folks, I believe, have done that to some regard. And, this is kind of the way we've always done it. And I guess I feel in some respects, that isn't working anymore, and we need to look at it a little bit differently. And I hope we can build some bridges and find some ideas. And for me, it's been kind of refreshing. I likened it back to what is new to me this year, and that's venturing into the broadband world. There was a lot of organic and defensive posture going on with that for many years, and I've created a very cooperative bill with Senate Bill 377 that they were very much involved in from the outset. And I think, I'd love to see some of that kind of more participation with some of the drug providers, some of the health system providers, and helping Hoosiers lead the way in this. Because we're so pragmatic in Indiana. We find problems, we define problems, and we try and work together for solutions. And, sometimes it takes a while, but I'm hoping we can do that with some of these issues.
How do you see things kind of differently moving forward? Broadband is what made me think about it, because it seems like as bad as this has been, it may create some new opportunities as well for folks, and that we're working differently and maybe even having hopefully more opportunities because we are able to work differently. And if you see kind of an impact on communities across the state with that, maybe sometime in the next year or two, and then forward with broadband efforts and everything like that.
It's interesting, and it certainly, for us to not reflect on 2020 and here early 2021, shame on us. It's a mistake to not look back, and I think as recent as today, you know as well as I do, some of our friends and colleagues have been working from home, and some of the industries, they found that their productivity has been strong. And so without so much investment in office space and some of that, there is strong productivity. A lot of this, telehealth certainly is right in there, right? That's exploded. What I think we're going to see in time here is it will be a different way, and it'll be a continuing way of doing business, and we'll still fall back on some of the traditional ways. I mean, there still needs to be meetings, there still needs to be conventions. In health, there still needs to be some office visits, but can the follow-up be done telehealth? And when you think about dealing with some of the elderly, loading them in a car, taking them somewhere, waiting through the office visit, having the visit, and then doing all that in reverse, that can, if I'm a caretaker of my parents, that can take 2, 3, 4 hours, sometimes a day off work. Whereas now the initial visit might need to be that way, but the follow-up, you can do on a Zoom call, and you can even be a part of that with a mother or father or an elderly, even if they're in an assisted living situation where they could be more collaborative in those things. We're really looking, an interesting place where we're really looking at that is in the DCS models, where we're able to access troubled families by video visits, so the contacts can be more frequent. So you still need to continue to do some of that, the face-to-face visits, but you can do more frequent visits, like this through Zoom calls and other things. So it really, we're going through a very transitional time. And I think I will never use new normal. I will never use that because I'm too much of a fight for the normal type of guy. But we do need to look on this year and see what we can learn and efficiencies and opportunities to change some of our business models, change some of the ways even we do government and access government services. And I think there's a ton to learn this year. There will be missteps as we move forward. We may expand too far and may need to back off some. And we need to be careful. But for my part in that and my involvement with broadband, I simply believe that the state that really gets that figured out and gets expansiveness of that will have a distinct economic development advantage moving forward. And if anyone approaches me, that's my mission. That is my vision. And that is now. We're going to get this done now. And I don't know how we're going to do it. It's going to take, everybody on board. Certainly the infrastructure providers, as well as the state and as well as our local partners. But we've just simply got to get it done because I think it's an integral part of how our economy is going to flow moving forward.
Anything else you're working on this session or that's kind of a short-term or long-term priority for you legislatively to really tackle and try to accomplish?
What I want to say, a legacy issue I've been working on is trying to help with our school resources and school funding. And a big gap in Indiana that I found is the ability of our schools to bill Medicaid for reimbursement for special needs IEP services that schools are already providing. So a lot of our schools are spending millions and millions of dollars providing these resources to some of our students. And Indiana simply lags behind our neighboring states and many other states in the country in accessing Medicaid dollars for that. And it's pretty dramatic. Last year, Indiana got $18 million comparatively. State of Ohio was over $240 million in Medicaid dollars. Michigan over 200 some, Illinois 170. If you want to look at maybe a little more comparative state, the state of Iowa got $110, $120 million. So, I mean, the premise is that we simply can do better. The challenge is to sort through the detail of Medicaid workings and the Medicaid amendment and how that we need to define that for the state of Indiana and not upset the apple cart too much, but also educate our schools and how they can better access those dollars. And I just think that's simply kind of getting what is ours in a way, because we are a donor state to the federal government, and I think our schools are providing these services. There's obviously been a lot of murmur around the Capitol in the last many years, those kinds of things. So we're going to need help to find those dollars if we legitimately think we're going to raise the pay in those arenas.
Yeah, no, absolutely. And it sounds like, at least from my experience, it was very much a collaborative effort down at the State House. And being a citizen legislature too, it always seems to me, just from my opinion and from what I've seen, there's a lot of expertise that goes down there. And it's really a lot of time. I think a lot of folks, most of the NAIFA folks know they're pretty active, so they know when they hear part-time legislature that it's really not a part-time job and it takes a lot of effort. But I think it seems like because of that, too, you get expertise and personal expertise that people then bring together that you wouldn't otherwise have.
Oh, you're absolutely right. And part-time is very much a fallacy right now. I mean, today I have 5 Zoom calls and going all the way till 8 o'clock this evening. So, and everyone has to deal with the work of the legislature. So here I am home on Friday doing all that. I'll get a few minutes to spend on my business and catch up on a few things here and support the employees there. And then I will pull the plug and have a good weekend. My daughter's coming up, and we'll do the Super Bowl thing on Sunday. And it just kind of hurts to watch Tom Brady play in another one for another team even, but we'll suck it up and have a good Sunday doing that. And even there, I'll find time in between to read up and read bills and see what's coming forward on some of the committees I serve on and what will be coming up on the floor and being prepared for that. It's really a two-way street is what you run into once you're out of the building. I mean, so much of it is engaged in being informed on the legislation within your committee and that comes before you for a vote on the floor. But then when you're home and even when you're down there, you're reaching back to home to help them understand some of the issues that you're working through on particular pieces of legislation that affect them and garnering good ideas of how things need to change for the future. But certainly I think the conversation throughout the state when we're in session is amped up a little bit, and it's the respective associations and groups that are doing their part in reaching out and both trying to influence legislation and trying to educate the broader public on what we're doing on selective issues.
Well, I appreciate it, and we appreciate you joining us here today.
We're in such a good place, and the challenge is how do we maintain that, and even more importantly, grow that. Indiana just kind of does things right, and we know when we leave in April, at the very least there will be a balanced budget, and all states don't operate that way. And that's what's very concerning about some of the conversation in D.C. right now. They're looking at bailing out states and cities that simply do not watch their dollars and cents. And, that really undermines everything we do here in Indiana. It would be very easy for us to spend our surplus that we have and take care of these issues that come in front of us. Me, right now I'm talking about broadband. We've talked about teacher compensation. We could throw money at that and not concern ourselves with holding reserves. But look at what those reserves have done for us in the last 15 months. It was legitimately a rainy day fund, and it rained. We tapped that for $1 billion. We may need some more of that to get us out in 2021. But I am so confident and so proud of our state because I think we will spring out of this. And what a phenomenal opportunity to have our state host every championship basketball tournament in the collegiate level, Division I, II, and III. And I've challenged Indy with that. Talked to some of the folks in Fort Wayne about that. Network with some of the folks down in Evansville. This might be the thing that really springs us out of COVID and to get our convention, our hospitality, our tourism business flowing again around the sport of basketball. I mean, the irony of that and the opportunity in that is absolutely phenomenal.
Our next virtual day on the Hill will be March 5th at 11 a.m. when we will meet with Representative Martin Carbaugh, Chair of the House Insurance and Financial Institutions Committee. Go to www.NAIFA-Indiana.org to register. Some of the popular cliches are, things never change, but that they stay the same, and if you keep them long enough, your old clothes will become stylish again. I don't think you can hear a newscast unless someone says, in these unprecedented times. Well, here with our monthly sales tip is Mindy Avon, who insists these unprecedented times actually have our industry looking to the past for direction. Mindy, I understand the theme of your tip is Back to the Future. Did you buy a DeLorean with a flux capacitor?
Good question, Joe, but no, I didn't do that. But I did do some research about how people saved for retirement back in the good old days. In fact, prior to 1974, there were no IRAs and certainly no Roth IRAs. In fact, Roth IRAs didn't come into existence until 1997. So how did people save for retirement back in those days before retirement plans? Well, some companies, larger companies, offered pensions, and we all would agree that a pension is a fabulous retirement plan, but we also would agree that those have definitely reduced in numbers over the years. And then 401ks, when did those come around? Well, not until 1978, 4 years after IRAs. And what I found was interesting was that IRAs weren't available to people to use if they were participating in employers' pension plan. So IRAs were really only an option for people who did not have the ability to use a pension plan for savings. And those early years, the maximum contributions were really quite low. So it was hard to save significant amount of money in an IRA. You could save in a bank account, and I'm sure lots of people did that. Back in the old days, the interest rates were pretty high. So you could actually buy CDs or even just put money into a savings account and earn a decent rate of interest. But again, we would all agree that interest rates have reduced, and now it'd be hard pressed to save anything significant in a savings account or even using CDs. So thanks to early life insurance companies and NAIFA, who met with President Wilson at the time to secure the tax-deferred nature of cash value in life insurance policies, people were able to use that cash value to supplement their retirement income or savings. They could do that by withdrawing the cost basis on a tax-free basis or using policy loans to take money out of the accounts. There was even a generic term that was used called LIRP, L-I-R-P, life insurance retirement plans. So people definitely had a method, insurance companies promoted it. However, over the years, permanent life insurance kind of fell out of favor thanks to a syndicated columnist who kind of poo-pooed the whole idea. And retirement plans at work became more common, 401ks, Roth 401ks, simple IRAs. So people became more accustomed to utilizing their retirement plans at work to build up retirement savings. However, but just like the title of this segment says, Back to the Future, I believe that we're going to see a swing back to those good old days and those life insurance retirement plans for one main reason, and that's taxes. We believe taxes are going to go up potentially, and high income people have a very limited capacity to save for retirement in a tax favored way. So life insurance, permanent life insurance, they have no caps on the amount that you can put in as long as you stay within the MEC limits. And it's an awesome way to put money in, protect the future of your family, allow the cash to build and grow on a tax deferred basis, and have some tax strategies you can use in retirement to withdraw it. Some people would call permanent life insurance a Roth IRA on steroids because it can provide so much more than just retirement savings. It can provide a death benefit. It can provide long-term care benefits if you have a policy that allows for that. It can allow you to create a pension by annuitizing the cash value, or it can, allow you to take random withdrawals from the cash value. So it really gives you all of these benefits of a Roth IRA, since you can structure it to take withdrawals tax-free, but it gives you so much more. So again, I think that because of taxes going up and the fact that high income folks are limited on being able to add to Roth IRAs or even to their own 401k, there are limits. Anyone who wants to save more for retirement should be looking at permanent life insurance and looking at how they can use that in the future. The other piece with the permanent life insurance is that with the Secure Act, they've now changed it so that IRAs and 401ks, if you die and pass it on to a non-spousal beneficiary, they have to withdraw the money over 10 years, which could cause significant tax situations for their kids or nieces, nephews, whoever they leave it to. So using the life insurance would alleviate that also. So let's go back to the future. Let's look at life insurance in a whole new way.
Thanks, Mindy. It just proves another cliche. Everything old is new again. And now for another contest. Where's the trustee? This month it's me in front of a new and both topical and controversial sculpture. Can anyone guess where it is? Don't worry, I was wearing a mask and social distancing from the sculpture, so I'm okay. Email Sandy at the address below to guess where I went to see this new and unusual sculpture. Oddly enough, it was designed years ago but was installed this winter. It's supposed to be a stylized sunburst, but I know what it looks like to me. We all know how good NAIFA is at advocacy, but your professional organization provides many other benefits to its members. Many of you may have received this mailer telling you about what NAIFA is doing to help you promote your business. Here to give you more information on this exciting new member benefit is Suzanne Carawan, Vice President for Marketing and Communications for NAIFA National. Hi, Suzanne. Welcome to NAIFA Indiana this month.
Hey, Joe. Thank you so much. It's such a pleasure to be back again.
Suzanne, can you give us some more details on the marketing program outlined in this flyer?
Absolutely. So hopefully everybody has at this point received a postcard in the mail with talking about our new release of what's called Nefa Connect. And you can find that at NAIFA-Connect.org. And what this is a combination of a brand new online community. Think about it as NAIFA's own LinkedIn, but it's our community, it's our private data, and it's theirs for all of us to have great conversations and encourage each other along the way. So there's that component of it. And then the second component is probably what's really going to make people even more excited, which is that we've updated the Find an Advisor consumer-facing search tool. And the new search tool is powered by the combination of your member profile information we have on file for you, as well as additional information that you can input talking about your, let's say, educational experiences, activities that you might belong to within your community, your likes, dislikes, etc., to help consumers really get a feel for you and make an informed decision before hopefully reaching out to not just get any advisor, but to get a NAIFA advisor. And again, all of this will be found within the consumer site, which is financialsecurity.org, and we will update and replace the Find an Advisor with this new search tool that is powered by NAIFA Connect. And the other exciting thing about NAIFA Connect is that it will work on both your desktop, it'll work on your phone, your tablet, etc. So making sure that you can stay connected with all of your NAIFA family across NAIFA Nation is something that's a key component to our new 2025 strategic plan that went into effect in January of this year. So we're really excited to keep moving forward on our three pillars, which is brand amplification, membership growth, and membership experience. And so we're so happy to talk to NAIFA-Indiana, who's doing a great job of all three.
Wow, Suzanne, what a great program. This will really benefit our members and greatly enhances the value of NAIFA membership.
Thanks, Joe. It's, as always, thank you, NAIFA-Indiana. You guys are always doing such a great job, and such a pleasure to have you and work with you. And please keep doing good work.
Thanks, Suzanne. We'll look forward to hearing from you soon.
Well, stay tuned, Joe. There's more to come.
Thanks, Suzanne. We'll look forward to hearing from you soon. Keep up the good work.
Thank you. Thanks so much.
One of the features of NAIFA-Indiana this month is profiling our new members. We are joined today by Rock Plank and Shane Smith, who were profiled as new members last year. Rock, how did your new member profile work out for you?
Joe, I loved it. What was helpful was it gave me a chance to introduce myself to the membership. I've run into a couple other members now who have said that they've seen the video, so it was more than just my mother watching it multiple times. And so it gave me a way just to get my name out there, and I was really thankful for the opportunity.
Shane, how did your new member profile help you?
Just to mirror what Rock said, it's just another avenue for other people to find you and get to know you as a financial advisor. And I think being introduced through Rock, I think networking is so undervalued in this business, and it's just another way to connect with people.
I had the opportunity to see Shane's introduction. It gave me some insights to who he was, and I liked that. It gave me something different than just seeing it on paper. And so it drove me to reach out to him. It drove me to reach out to someone that I know that works with me close to him and said, hey, we really all need to connect. And then based on that, we got together. We were able to talk about how we can help clients. And so I wouldn't have done that if I had just seen the member profile on a newsletter. But having the opportunity to watch Shane and him introduce himself, that really helped me want to connect with him.
And then the two of you have been working together on some projects?
We've had the opportunity to now discuss folks, and then I've introduced him to a coworker. My sphere is more for those over the age of 62. whereas my coworker is more for those under, and then Shane, being with what he does, he kind of covers both of those areas. So we've now set that foundation, and we wouldn't have been able to do that without the profile.
Shane, what can you share with us about that?
Just connecting with Rock has been a great experience, and with one of his coworkers. As I mentioned, I think as financial advisors, we like just to stay in our wheelhouse, maybe of insurance and investments, and we don't really think about the value that we can bring to our client and that other people can bring to our clients as well. So I think as financial advisors, we need to think about the value that people like Rock as a mortgage broker brings into that relationship and his coworkers. And also I challenge financial advisors to think about, do you know other property and casualty insurers? What about health insurance? What about realtors? What about attorneys? What about CPAs? There are so many, as a financial advisor, you can potentially be a quarterback in those relationships, bringing good people together. And that's the thing that, going back to the NAIFA profile, that's one of those things that helps us do, is it helps get our names out there. People know how we can connect people and help the client in a more comprehensive basis for a comprehensive plan. That's the value that I see, as Rock being one of those great people in that wheelhouse that I have now.
Thank you. Thank you for sharing. It's turned out to be a nice association between two colleagues now. How does this make you value your NAIFA membership?
To me, it's one more example how we're not just members, that you guys or fellow members are actively trying to help not only educate us, but also connect us with others such as Shane. And so I appreciate that as a member.
It adds value in that when you're a part of NAIFA, you access other people in the network other than just other financial advisors. And that's something I didn't even realize would happen, that Rock would actually see my video and even come out to reach me. I think a lot of financial advisors sometimes think, well, why would I be a part of another organization where there's other financial advisors? But actually, Rock, I was connected to Rock, and he's not a financial advisor, but he still saw it and saw the value in meeting after watching me, I guess.
Thank you. Thank you for participating with NAIFA-Indiana, and we'll be seeing you guys soon.
Thank you.
Thank you.
You too can be profiled in NAIFA-Indiana this month. We have been emailing new members but haven't been getting much of a response. If you know a new member you can encourage to be profiled so we can get to know him or her, please let us know. By the same token, if you are a veteran member and would like to be profiled, contact us at the email address on your screen to let us know. This concludes our March edition of NAIFA-Indiana this month. Don't forget our upcoming events. Virtual Day on the Hill with Representative Carbaugh on March 5th at 11 a.m., a 1-hour virtual CE titled Speak with a Purpose by Marlone Hall, and the 3-hour ethics course, which is required every 2 years as part of your license renewal, will be taught March 15th at 9 a.m. Go to www.naifa-indiana.org to register for these and all NAIFA Indiana events. I look forward to seeing you in person soon. In the meantime, stay safe, and if you manage to get a COVID-19 vaccination, send us a photo so we can put it on our social media page. We want to set an example for our clients and the rest of the state. Together, we can take on anything.